So where were we? Where was I the last couple of months? And what kind of deductions can you deduct from your taxable income to reduce your income tax liability? My name is Jacques Taljaard. This is Practitioner Accounting Services. I am sorry. Tax season happened, had a move happening, move of the offices and all kinds of things, and I just literally struggled to get through everything and find some time to make a video for you. I've been owing you a video, but I'm sorry. The idea of this video is to go out with still about a week or 2 weeks worth of time before the deadline for submitting in personal income tax returns to SARS on the 4th of December, and I am hoping that this would still be beneficial to my viewers. So in short, firstly, what kind of deductions can you deduct from your income tax? Now there's a couple of major ones. First off, there's a specific clause in the Income Tax Act that says that an individual cannot deduct personal expenses. It's section 23G, and it basically says that your groceries, your toiletries, your basic living expenses cannot be deducted from your income tax. Unfortunately, that is the case, and unfortunately there's not much we can do about it. But section 23G is the counterpart of section 11A that basically says that any expense that you occur in the production of income is deductible from your income tax. Depending on the kind of income you earn, there's a couple of deductions that you can claim fairly regularly. These kind of deductions are usually in the sense of either specifics, hang on again, turning. These kind of deductions are specifically specified in the Income Tax Act. Now there's a couple of major ones, basically 2 or 3 major ones. The first one is SARS allows, well, the Treasury allows for you to make provision for your retirement. Because of that, you can deduct up to 22.5% or 22.8%. I'm not 100% sure, but it's about 22% of your total income that you've contributed, right? So you can, let's say for example, you're contributing 22% of your income, taxable income, to a retirement annuity. You can deduct that from your income for tax calculation purposes. Right? If you've contributed 30%, then it would be limited to 22. But if you've contributed only 10% of your total income to your income tax or to a retirement annuity, you can only deduct the 10%. So that is the principle for retirement annuity. Then there's also what they call Section 18A donations. These are donations that you make to a public benefit organization, a non-profit organization that's registered for public benefit, such as religious organizations, such as mostly things like hospice, the Cancer Association of South Africa, these kind of entities who are registered as a Section 10. Now, some religious entities are registered for that. Some orphanages are registered as PBOs. But when you submit or when you make a donation to such a PBO who are Section 18A registered with SARS, you can actually donate as much as 10% of your total income to such an entity, which can then be deducted from your income. Right? Again, the limitation applies into the lower of what you've actually donated or 10% of your taxable income before that line item. So everything before that, if I recall correctly, there's only your retirement annuity contributions applicable to that, to the calculation when calculating your taxable income up to this line. And you can only then deduct 10% of the amount after your retirement annuity contributions. One thing that's also and the third big deduction for a lot of individuals is medical aid and additional medical expenses. Now, I've done a video on that before. It hasn't changed much. There's a couple of small details, such as the amount that you use as part of your medical aid contributions rebate, part A, basically. Now that's changed, but it's changed like 20 rand or something. It hasn't changed much. The formula primarily remains the same. So for the most part, there's a lot of things that remain the same. In the video, I will link it up here in the description. Well, I'll link it up here in the tag. That video will explain how to calculate the medical aid tax credit, the rebates, and then how you can deduct it from your income tax for those purposes. So having said that, those are the three major ones. Now, there's a couple of exempt incomes. One of them is about 20% of a travel allowance. When you get a travel allowance, you can also deduct certain expenses directly to a travel allowance. And that brings me to another category of deductions. You have deductions that goes hand in hand with an income. A travel allowance is one such one. Is one of those. But if you want to claim a travel allowance deduction, right? You claim a travel allowance is usually an allowance paid to you for a vehicle that you drive for business purposes. Now, this is usually and primarily for individuals that earn interest, or not interest, a commission, such as sales reps. They do this very often, but accounting clerks also quite often have to travel for work, go to a client, get some work done, and go back to the office. And for that reason, they then are also refunded with a travel claim. A travel allowance. So when you want to go for this kind of thing, you need to have a detailed logbook. You need to take down the reading of your odometer, your kilometer reading on your car or vehicle. Take down that reading on the 1st of March every year, and then on the last day of February every year. I'm not saying the 28th, because sometimes we've got 29. So the last day of February of every year. You need to actually, at every day and every trip during the year, you need to specify what the opening reading on your odometer is, the total trip distance, if it's a private or a business trip. If it's a business trip, where have you gone and what was the business trip for, and the closing odometer reading for the day or after the trip. So all of these things has to balance, and SARS quite often gets very, very fussy about this. Now, having said that, there is a way. There's a couple of these tracker entities have products that will track your trips for you. You literally just need to, on the 1st of the month, when you register for this, you put down your open kilometer reading, and it will calculate everything for you. Now, I use a device that I got from Taljaard. It's called My Little Logbook. It works for me. Now, I'm not affiliated with them. I'm not really endorsing them. I'm just mentioning it's an option, and I use that. Hang on for the beep. That beeping you hear is my indicator light. I have my family jokes with it and says it's a musical indicator light, because it makes a sound whenever the indicator flickers. It's also very easy for me to then realize, oh wait, I forgot to leave it on or something. But it's beside the point. I digress. What I'm trying to say is that there's, for you to claim your travel claim, or to claim expenses from a travel allowance, there's certain criteria in place, but it's possible. You can claim a travel allowance, or you can claim your travel from a travel allowance. Then essentially it means that your travel allowance became tax-free. Not 100% as such, and it's not as simple, but that, or at least a large section of your travel claim becomes tax-free. Now, I had 2 clients in the last year who received a significant tax deduction or a significant tax refund because of the impact of a travel claim. Now, Another one would be a subsistence allowance. That basically means that SARS basically allows your employers to pay you a sustenance allowance for when you have to travel for work. I had a client that had to travel to a different country this year, and she received a significant amount in foreign currency in terms of rand, but in the foreign currency, that was basically enough for her to cover expenses that she had to undergo there, on top of what she had to undergo in South Africa, where she is permanently residing. So there's a list, and well, this SARS issues guidelines as to how much of which currency you can consider to be a sustenance allowance, and the whole amount can then typically be deducted then from your income, provided that the sustenance allowance that you received is less than the guideline that SARS given. Again, it's the less of a specific amount issued by SARS or the actual. So those are just a couple of the big expenses or the big deductions that you can deduct from your income when calculating your income tax. My name is Jacques Taljaard, this is Taljaard Accounting Services, and I hope you have a great weekend.